All right, let me say hello and welcome to another weekly edition of Stock Market Mutterings. This is for the week that begins on September 9th, and it is so nice to see you guys again. Of course, I can't physically see you, but I know you're there. And that's all that's important, and I do appreciate it. So as always, I'll try to take a grope in the murkiness here. I'll try to provide you with some quality trade setups, make some sense out of this market. But before I get started, as always, if you need some help with your personal trading, I'm going to post the link up here to the site. We have the live trade room, the live trade feed, the free DVD. So whatever educational content you're trying to obtain from the market, you will find it at thelincolnlist.com. So today I'm going to start out by saying this. Can I trust you? Can I trust you? After you have betrayed me. And who I'm talking about is Mr. Market. Now, if you go back over the last month in these mutterings, we were talking about we were in a very consistent yet very wide range in the market. And one of the things the market does when it goes through a corrective phase is you have this initial burst of selling, which is what we got in the latter part of July into the beginning of August. You had like 4 or 5 days of really strong selling. Then the market normally levels out after that and then kind of bounces around and ultimately ends up picking a direction. Now, I said a couple of weeks ago, at some point in the future, we'll either break to the lows or break up through the highs. And this week, we broke through those highs. Go figure, right? So that was 294. Let's say 294, 295 area was resistance there for a whole month. And you had the lowers down around the 284 area. Now, one thing that we did note is that most of this selling that took place were normally one-day events. So what I'm talking about is after that initial 2 to 3 day sell-off, you had some pretty big down days through the month of August, but they were only one-day events. So you had like this pretty big sell on the 14th, and then the next day the market bounces. You had another really heavy sell down day on the 23rd, market bounces. You had a gap down here this week or late last week, and then you just begin the week with a thrust, and that takes us up over here. So now what do we do here? Is this going to be a move that takes us to all-time highs? Now, the Fed's coming up here in like 2 weeks or something like that. And normally what we've seen over the last couple of years is the market runs up into the Fed announcement. And of course, if you're just going by knee-jerk reaction and recent theory and stuff like that, this is the thing that continues to happen in this market, is that every time there is a correction, the next move after that, once the market kind of gathers its footing, it makes an all-time high. So this, if you're ever looking for an extended correction, it's going to have to stop making all-time highs. So we're pretty close here. We're only like 1% or percent or half, something like that off of there. So watch that. If we begin strong early on Monday, I would expect we at least test those highs, which I have is like 300, 302 somewhere. I would think you're going to see that action only a couple of points away from that. So you might see that. You may begin the week with a very bullish move, unless there's a tweet. Because there's always a tweet, guys. There's always a tweet. Just a couple of these, and man, your rally is over. So let's talk about a couple of stocks. We had some good ideas on the table with Roku and Shop. Roku worked out, but it didn't come to play until later in the week. And I still want to watch this one here because the setup actually became better later in the week than it did at the beginning of the week. I was going to talk about this as a short. Now, we had some longs in there, but ultimately the short is what paid the most. And that was just really on this one gap up morning and a sell-off. I like this stock. And like I talked last week, I love me some Roku. It's been a very good stock to me. But man, you're up 400% for the year. It's not going to continue at this type of a pace. I don't care what it does, who it is, where it came from, what it's about. Right now, it's kind of changed from nothing but a trading vehicle at this point. And I'll put it that way. There were some points there a couple of months ago. I was okay with swinging it, which I held some overnights in it. But now I think it's up too much to do that until it can kind of settle in. Now, it did a pretty good job of coming back here on a Friday. So what am I ultimately saying here is I think if you're going to long this, it's mainly a scalp. You're going to have some good days, I think, where this thing rips $4, $5, $10 or something like that. But I think ultimately here in the very near future, you're going to see something that's a little bit deeper. Now, maybe it wants to attack $200, an emotional level. I think if you get over 175, you start getting around 180, you're probably going to see something like that. But I'm starting to think here, nonetheless, that this is probably going to taper off. And when I say taper off, I'm not saying a market correction, but if you just come back and you test the 20 moving average on the daily chart, you're talking about 143. It's a $20 correction in something like this, and the chart would still be bullish as hell. I mean, it could give up $70 right here and still be a very bullish stock on the daily chart. So let's watch it. I still I've gone from 100% this side bullish Roku to, every week that passes, my little Roku meter is heading over to the short side. So I kind of want to focus on that a little bit. Again, just because it's up doesn't mean you're supposed to short it. Wait for setups. Wait for the market to tell you and give you the clues. That's what we had the clue there on Thursday, was we had the gap up in the pre-market and a really strong fade. I mean, it was just limping into the close, and then you got a very, very big washout. Now, even with that, it's just not going to go straight down. I mean, look what happens after it comes here and buries down in the 160s. It ends up rallying $7 before the day is over. So even if you miss the short, this is a good enough trading vehicle that'll pay benefits to both sides. So it's not going to just tank $25 and stay down. It's most likely going to bounce. So watch this, Roku. I think I've said enough here on that one. I got a couple more here I want to talk about. Let's take a look at Apple. I know it's not the sexiest. Apple. Mr. Apple. This is a good level. 214 is a very attractive level. You might not think it's sexy now, but man, when it crosses 214, if it crosses 214, it's going to be pretty good. It could be pretty good. I mean, you got some resistances here that are where this stock tapped through the middle part of August. You had like 4 days hanging around 214, pulled back down in there to 200, kind of gathered itself up here. And I thought Friday we were going to see that. You had a little squeeze right there early in the open. I hate those. I hate when the first move is just a breakout on the first 5-minute candle. But it gave it back. It wasn't able to get through there, but that's okay. It's just one more day of consolidation. What I'd like to see in this case is don't gap above the 214. Don't gap up $3 or $4 on Monday. That's not what I'm looking for. But if it can stay roughly in this range, break this 214, I think it's a good trade. And on the flip side of that, I think you're going to see that, maybe not in one day, but I would think if it goes over 214, you're going back to 220 and probably testing these highs, which I think might be all-time highs on the 31st, which would be 221.37. So Apple, not a bad look. I'm going to bring back the TWLO, TWLOster. Mr. TWLO. Guys, is it going to do it or not? Is it going to do it or not? Is it going to do it or not? Do something, TWLO. Now, what I'm talking about is a few weeks ago, I mentioned this stock. I'm going to back it up here a little bit. And I said, damn, this 121.80 is like the Rock of Gibraltar, right? It's like so freaking solid. And it's now the 200 moving average. It looked up until Friday that this thing was like, all right, I guess it's just going to hold. It's going to do its business. And then just one washout here on Friday, and you're back down here. Now, one of the things I don't really enjoy doing is shorting down at support, because you're going to find it most of the time these things actually bounce, regardless of how stupid the chart might look. So here's a good case of this one. It's been down there 1, 2, 3, 4, 5 times, actually 6, 7 if you're going back there to May. 8, 9, about, God, what, 10 times here? 10 times? And that's what it is. It just does not want to let that go. And the key reason I keep bringing it up is if it does, when it's spending more time down there than it is up towards the resistances, if it lets it go, you could see a really big washout. I'm sure there's a billion stops sitting down underneath of that. And that is a monstrous technical level that goes all the way back damn near to March. So, you're talking a good chunk of the year here. This could get ugly. At least for one day, it could get ugly. We talked about that with TTD for those that been watching these regularly. If you want to know what I'm talking about, TTD here breaking that range. This is not even a solid of a level as what TWLO has. And it broke down and washed like $7 or $8. So TWLO, do something, TWLO. Just do it. Just take it out. Just take it out. And let's make some money on that thing. I like TWLO. I like TWLO. And I think the last one I'm going to do here is, I think it's CVNA. That's a pretty good looking chart. Let me get this thing out of the way. That's a nice little tight chart. Now, I don't know about the quality of something like this with a day trade. You know, probably have to put a little bit of size in. It doesn't quite have the range of something like a Netflix or an Apple on a good day, or definitely not Roku. But you got a really nice chart here. And I think if we begin the week strong, then this is something to take a look at, maybe even for a 1 to 2 day swing. So it's not a bad looking chart. Now, there's definitely a lot of other things in there. We talked about shop as well as a short play. I never got the short that I wanted in this. But you did see a pretty good sell-off there late. And again, what I'm just looking at here with this one and ultimately Roku eventually is when these things are up this much, the real money that's going to be made at this point probably is going to come from the downside. And you're looking for a brisk 5-10% correction on these names. And like I said, it wouldn't even, a bullish person that's been in all year wouldn't even notice it was down that much. So maybe this one here too, you've got some support down at 371, but again, I wouldn't short this one in the hole. You get down there at the bottoms and lows of the day, you're going to get smacked on probably on this thing because it gets vicious at times. But let's just watch it. Let's watch it. If there's a trade there, that's what we want to do. So Roku, Apple, TWLO, CVNM, I think I said that right. CVNA, shop. Let's see if those do something. But you never know what's going to happen. That's why you should join the live trade room or the trade feed. That way you at least got an idea of how things change, how quickly. So anyway, guys, I want to thank you again for watching this week's edition of Market Mutterings. As always, if you need to reach out to me, send me an email at support@thelincolnlist.com. Until next week, trade well.